It is Monday, the 6th of January, and really 2025 starts today. We had a pretty nasty, choppy, sideways November and December in Bitcoin. And to be honest, we've had the worst Santa Claus rally I think I've ever seen. So hasn't been a stellar end to the year. And it feels like a little bit of the uncertainty is continuing as we start. As you know, I feel like in crypto, certainly a lot of the bigger dinosaur coins that were all in a big wave 4 going sideways, and so it's really kind of a matter of timing before the next leg higher begins for me. And are we going to perhaps pull back a little bit further before that begins? Sometimes January blows the barn doors off, and we see really good trend moves from the very first week, and then some weeks are a little bit difficult. And I have a feeling that we maybe see that this week. This week we've got non-farm payrolls on Friday, which would be normal. We've got Thursday, the market closed for the funeral of President Jimmy Carter. And so it's a little bit of a disjointed week. And so it may be that we see a little bit of a slower start. So watch out for that. And it may be, that we see a kind of bumpy quarter before President Trump really gets his feet under the table and we see what he's going to do first. Certainly he's made a lot of promises and there's much hope for the crypto market, and I'm feeling pretty bullish about everything. But one thing that we really need for crypto to really continue with this bull run is a weaker dollar, and so we need to see how that's going to play out as well. Is it going to happen because we see weakness in other markets or in the jobs market, or if let's hope not. I'm feeling pretty bullish about everything, but it's just a question of seems to be like an awful lot of people are pretty bullish too, and we may not quite be ready. Let's talk about where we are in Bitcoin. So at the beginning of November, at the end of November, I was a little bit worried because we had this big options problem at 100,000, and it caused a lot of sideways. And really, we could argue that around this 100,000 level, we've really been sideways since then. I thought before the end of November options expiration that we would go sideways between 190, and we did. We popped above it then at the beginning in December, and then for the end of month options expiration, we were then stuck back underneath this 100,000 level. I have a theory, that when markets overshoot a level to the upside or the downside, if it's a big level, the most common pattern you see is a head and shoulders pattern. So it is possible that that's the pattern that we are setting up here. If that's the case, then that will give us some pretty nice easy targets if that plays out. And it's quite an interesting topping pattern. When head and shoulders patterns fail, though, it's usually because they're an equal measured move or a measured corrective move. So if that would be the case here, we wouldn't make, like normally for head and shoulders pattern, our target would be from the head to the neckline, projected from the breakout of the neckline, which would put us down here around 75,000 in the low 70,000, sorry. But if this then is just an equal measured move, then we could say, well, this is our first swing, high to low. Here's our second swing, and that kind of puts us in the low 80,000. So it makes a big kind of difference, but it gives us at least two target zones if we break down for here. Now, why do I think that might happen and we're not going to blow the gate off going higher from here? And the main reason is this price action really since this low that we made it on the 20th of December. It looks like a flat correction. I always look for three-wave corrections, and within this, if this to be complete as a three-wave correction and us to rally from here, I would like to see this swing lower from the high on the 26th of December to be at least 61.8 of this first swing, which it's not. It's fallen a little bit short. And all of really since this low, what we've done sideways here is equal measured moves, and we've done this again. If I measure from this low on the 20th to this high on the 26th, here we are sideways at this equal measured move level, and here we are sideways at this previous swing high and this 100,000 level here through the middle. So I would say if we are going to be finished with this correction, on our way to retesting the highs, and in the next swing higher, we have to overcome 100,000, and it really is all about 100,000 today, and that's also the swing high from Christmas holiday. And so again, if we go higher from here, that's very nice, because I still think the market owes us one more swing lower before this correction is over. But then, you know, we can measure from a higher point, and obviously we don't go so low. And if we don't, and if this is the high today, which it could be, then again, because I think this is an ABC, so here's our first swing. So here's our first swing lower, ABC for our B leg. We're going to look for our next swing lower. And that kind of puts us at 89,940. So basically 90,000 if we drop from here, which again was the level right back at the end of November, which I thought would be the bottom of the range. So 90,000 key support, and if we do the equal measured move, it takes us down to 83,800 or 84,000. And this equal measured move and the swing low from the beginning of November, which for me would be key support, really, and a bargain to be looking to buy it if we could bounce from here, because we might again do that bigger head and shoulders pattern and back towards the daily 200 moving average. So underneath this really key resistance today, and looking at the price action so far ahead of the open, yeah, that's really what we've got to get above. And here's the thing, if this is all about options positioning and gamma positioning, then if we get above this level, we might see one of those spikes like we have done before in this market, where everybody has to buy to reposition and hedge, and we could see a bigger move higher in Bitcoin. Okay, the next. So again, I am watching out for at the moment, you know, we're riding these hourly moving averages, everything looks fine. I think though that we could see another leg lower from here. When I see a sideways ABC correction like this, I usually rely on the fibs, and I go from like this. So if we go from this low to high, I actually think in this instance, because I like it on both swings ABC like this, I would say back underneath 98,000 then would put us back underneath this hourly 50 moving average, and we would be looking for a bigger pullback. And the most common retrace of a big kind of ABC correction like this is a 786, which would mean underneath 98,000, you know, the kind of first target would be back down to 93,800. So 98,000 today becomes key support to watch out for on a bit of a pullback. And that's what I'm looking at here in Bitcoin. If we take a look at where we are in ETH, very similar thing going on. So if we look at the, this is a daily chart of ETH. I got kind of quite excited that we are above these daily moving averages, and you know, for me, they're really important support and resistance. You can see if you look left in this ETH chart that that's how they work, and we have gone beyond that equal measured move and 50% level, and potentially, you know, we could just do a shallow pullback and keep going higher here in ETH. If I measure from, again, the 20th of December low in this market in ETH to this first high, and say this was an ABC here like this, we have got room to squeak a little bit higher in this one. Let's look at it on the 4 hour, make sure I'm not doing this wrong. You know, we could probably argue that this is actually 3 waves here. So first swing, second swing, and here we are, an extended one. And this, you know, potentially we have just made a little double top then at 3,667, which would be the equal measured move in this one, which would mean key support is the back test of this 61.8 level here at 3,495. So basically 3,500 needs to hold as support for ETH if we're going to keep going higher, and back underneath 3,500. It would mean that this whole rally from the 20th of December was a correction, and potentially we are setting up another swing lower in ETH. If that was the case, we were to reverse here. If I measure from this high to low, project it from here, our first target would then be in this one, a retest of the lows in 3,000, and 2,694 would be the equal measured move from this high in ETH. So pretty interesting. Again, you know, same as the end of last week, pretty interesting resistance here at 3,696 is high. And we see, are we just going to shallow pull back and hold above those daily moving averages? A close back underneath that daily 50 wouldn't look very good, I have to say. It would just look like a pullback, but a really much bigger pullback underneath 3,500 for ETH. So yeah, let's see what happens from here. Really, this first week is quite a good week, kind of not to risk too much money, and to wait and see how stuff sets up. I do think that better opportunities could come. And there's nothing worse than rushing in and kind of getting it wrong at the start. If we look at Solana, we're in a very kind of similar pattern, but in this one, we are holding underneath the daily 50 moving average here. This was our key resistance. It was a little bit higher in terms of an ABC. You know, this potential is a little bit more bullish, this swing here. We could argue that from this low, we're on our way up, and this is 1, 2, 3, and we're in a little sideways wave 5, and we've got more upside to come. And in fact, the fib retrace levels would argue for that. If I put them on from this high to low, let's fill in some more. Here we validated this I've gone from the high at the middle of November in Solana to the low that we made on the 20th of December. We validated this 236 fib very nicely. Here we are sideways at the 50%, which potentially is a reversal, but if we push above it, 230 and 245, if we fall back underneath 209 and underneath this daily 20 moving average, it would say to me that this is just a big three-wave correction, and we unfortunately have another leg lower. And as I said before, I think we could potentially see anywhere between kind of 170 and 165 in Solana. So, and that would mean that this swing is 61.8 of this first move lower. So key resistance at 220, basically 219.85, and that daily 50 moving average. And back underneath 209 would be a reversal. If we look lower time frame at what we're doing, you know, we could do it, but this really is the key decider. You know, if we say that this was a three-wave correction and we're going to push higher from here, then I would draw a trend line through these highs. I always watch for a third touch of this trend line. This is an hourly chart as we head into the open. I always watch for this third touch to be a false breakout, and then we will either reverse here, in other words, pull back more than a 236 fib from this low, or we'll go sideways in a little flag pattern and break out. And I kind of like that because, you know, at the moment it kind of reduces where you're wrong or where your stop needs to be if we could make a nice little bullish flag and break higher. When you break out from a three-wave correction like this, your first target will be a retest to the highs, and it'll be this 50% level at 219.85. And what you don't want to see then, if we were to break out and do that, what you would not want to see was just a false breakout double top kind of retest the highs. We really need to hold above 219.85 in Solana to keep going higher, and then 230, as I said, 230 and 245, and so on. We continue higher in that one. Okay, so the next chart we're going to look at is one of these dinosaur coins that we're watching that are in a big wave form. We want to see, are we going to push higher here, or are the patterns that we're looking at going to hold? So the next one we're going to look at, let's take a look at Doge. Now, on the weekly, let's go out to the weekly. So big picture, if we look at where we are from the August 2023 low, this was a very nice 5 waves up. So look, 1, 2, 3, 4, 5, 3-wave pullback. And I think that this is what we're making here is a big wave 3. So 1, 2, 3. Within this wave 3, we would like to see 5 waves. And I think that potentially what we're doing here is a big wave 4, and we are owed another leg higher. In Doge, for me, it's quite easy because we're in that really nasty golden ratio zone consolidation. So between a 61.8 and a 38.2 fib level, which if I draw from the highs in April 2021 to the lows in 2022, is where we are. So this becomes kind of a consolidation where the bulls and bears fight it out. And so far, the 61.8 is resistance. And although we had a look under this 38.2, we are kind of holding it as support. So I'm still leaning on this wave 4 pattern and then another leg higher to come. And within this, you know, this 50%. But it's quite interesting if we also in Doge go from, let me see if I've got it here, not that one. If I measure from the all-time lows back here in 2014 to the highs that we made in 2021, you can see that we're also still in this 618, 38.2 golden ratio consolidation zone going this way, and we are right here at the pivot point in the middle. In fact, 0.38 for Doge is exactly the 50% of the all-time lows to all-time highs in this asset. So we are a little bit sideways at a pretty tough support and resistance level. You know, these big 50% levels often turn out to be big kind of pivot levels right through the middle. And if we look left here on the daily chart in Doge, that's definitely the case. And so I think if we can say that as long as we hold above 0.38, we can look optimistic, even though we're still in this really nasty chop zone, for another swing higher, maybe back to the top of the range. But that if we were to close back underneath this 0.38 level and back underneath the daily 50 moving average here, which is also at this 0.38, that unfortunately this would also look like, you know, back to the bottom of the range and back to 0.29 again, which is quite a lot lower than where we are now. So I'm watching this sideways at support underneath 0.38 again. I worry that we see a bigger pullback. And if we argue then that this was a big ABC corrective move from the low that we made on the 20th of December, the most common retrace, if we drop underneath this 0.36 level would be back to the lows of this range, and the 786 retrace at 0.29. So that's what I'm looking at in Doge, really key support, and you can see we've been testing it last couple of days. It is kind of important that we hold above and don't get stuck underneath 0.38 then in Doge. Okay, next one we're going to look at is Ripple. What a lovely winner for, I know so many people, you know, he gave up on Ripple just when it took off, and you know, thought the only thing they're ever going to make money in is meme coins. And now here in Ripple, this is a monthly chart of Ripple US dollar. You can see that we are a little bit, I've got it in log scale, let's get it out of that. We've been doing really well lately in Ripple. I still think that we are potentially at a little bit of a difficult wave 4 level. In other words, this is 1, 2, 3, we're in a wave 4 and we're going to see another swing higher. And when I put my fibs on from this high to this low here, we're underneath this 786 fib level. If we look at it on the weekly, that's where we couldn't close above on the weekly. So this becomes our kind of resistance level here at 2.63. And the rules say that when you reverse at a 786 fib, if you close underneath the 61.8, which is here at 2.09, you're going to see a bigger pullback to 1.33. So far on the weekly closes, we are staying very nicely in this sideways range in what I think is a wave 4. The wave 4 I'm looking at is measured from the 1st of July. So 1, 2, 3, we're in wave 4 and I'm looking for another leg higher. And honestly, like, it looked like Ripple was making a move. I've got all these lines. Let's clean up and I'll explain why I've drawn these lines. So 2.63 weekly close, high of our range, 2.09 weekly close, low of our range, and here we are in between, kind of messing everybody's heads up. Yes, did we get a really nice beginning of the year rally off this low? Does it mean we are going up again? I don't know. One thing I do know is that wave 4s very often become wedges or triangles. They become declining wedges or rising wedges, or just 5-wave moves, whereas most corrections are 3 waves. If you see a 5-wave one, quite often it's in a wave 4, which is what I think we are in here in Ripple. So that would mean that if we count it, so this is our, if we count from the high on the 3rd of December, this first 3 waves lower to the low that we made on the 10th is our first swing. Then second swing, what you can see from the low on the 10th to the high on the 17th, 7 days, we had a little pullback here in the middle, so it's 3 waves. I kind of feel like this is 1, 2, 3. We've just, with this 3-wave move, done a choppy, very choppy wave 4, and we need one more swing lower before we launch again. And I would be wrong if we break out from this triangle consolidation and challenge the highs and break out. Now, at the moment, as you know, I think third touch is a trend line. So here's our first touch, second touch. Third touches are very often false breakouts. This was, didn't go very far, but it did just go beyond that trend line. And so we can say that potentially, in fact, it could do a bigger false breakout. We need to be a little bit careful here. But if we measure from this low to this high, how are we looking here? We're kind of sideways, aren't we, at this equal measured move level? It's really not clear. Now, the other thing that happens if this is like a triangle is that the fib ratios very often repeat. In other words, so if I go from this high to this low, let's make it darker so we can see. This first rally was to a 786, right? So if we repeat that, that would mean we would look for this 786 to be resistance again. So I wouldn't be surprised if this tries one more swing higher. And so for me, the key resistance that says, you know, we kind of need to break this pattern, this tightening, coiling up, sideways pattern that we're in here in Ripple. I would really like to see a close and hold above 2.56. That would say to me that this correction is over, because otherwise, if we can't get above 2.56, so I'm not sure that we don't try another push higher here, and that's the level I'm going to look. And if we can break out above 2.56, I'm going to look for the highs at 3.3 and so on, and a retest of the highs, which would mean the highs from December. And then the next test would be the highs, obviously, all the way back from 2017 at 3.31. So that's how I'm looking at Ripple. At the moment, this price action is really bullish, isn't it? If we look at it on the daily, we had this really big rally, and really all we've done is gone sideways. Doge's indecision. We haven't really taken out these swing lows. We're holding above the 4-hour moving averages. If we look at it on the hourly, perhaps not so much, but it's not the breakdown that, you know, it's not the big, massive bearish reversal that we could argue is a little bit of a top yet, or a bigger swing. At the moment, it's just a little bit choppy and sideways. And again, I would not be surprised to see one more push higher in this one to 2.56 and above 2.56. Then, yeah, we're on our way up. That's, for me, the key level. It's a little bit sideways. Even if we swing lower here, let's talk about, you know, we've got pretty nice 3 touches on the bottom here now. or at least 2 touches. We'll move it down to this lower one. And so this is kind of really the bottom of our range. 2.09 then is where we could come back to in the 5th wave. Quite often though, when you go A, B, C, D, E, and the 5th wave is truncated, it may not come all the way back as far as you want. Everyone will be watching it. So the other thing we should warn about as well is if I measure how long this wave 2 took, which took quite a long time, it argues that we could be in this correction in Ripple until February, March. And we need to be a little bit patient, and maybe the first quarter is going to be a little bit bumpy. So I'm bullish above 2.56. I think we've got some sideways correction and consolidation to continue with. Now, if we close underneath this daily 50 moving average, or if we break the lows of this range, quite often what looks like a bullish pennant, which is what this does at the moment, becomes a bullish flag. And so our correction could end up with a really nasty final swing, and we could end up, with a flag pattern and bringing us back down, further than we want to come, let's put it that way. For now, I'm going to lean with the really bullish argument because I think the dips in this are being bought pretty nicely. But if we lose 2.09, we could come to 1.71 and potentially 1.33. I still think it's corrective, but yeah, that's how I'm looking at it. At the moment, it's a really nasty, choppy, sideways correction. We've been in it since the beginning of December. I'm not quite sure that it's over yet, but above 2.56, I would say yes, it's over, and we are going up. And there are a lot of people who like Ripple, who got out of Ripple, who wouldn't mind another dip here to buy a little bit more. So be careful that you're not just selling to them. If you've decided to hold for that final swing, then don't get shaken out at a worse spot. Okay, next one we're going to take a look at is DOT. And I've got a few requests. So DOT, big picture on the weekly. This looks like a really cool double bottom. If we measure what the low price on the low here in October was, 3.56, and the low here, 3.59, there's 3 points in it. So potentially it's kind of not an exact double bottom, but it's really pretty close. But really, we could argue what it is a really cool sideways range. Now, just like we talked about in Ripple, we made a slightly higher low here, and we made a slightly lower low here. So we are stuck in the middle of a sideways range in DOT. What I think is maybe interesting about this sideways range, and let's just mark where that 50% is these moving averages. If we measure from the biggest swing, which is here at the start, here we are right in the middle, but we have flipped these weekly moving averages and we're holding them. And we have got this 50% level here, which is also in the middle of this range, a bit of a pivot level, 7.72. If we extend this left, you can see that this was previously a little bit of a important support and resistance level. So 7.7, if we can push above it, would say that we are going up again and move down to the daily. And if we look from the high that we made at the beginning of December in this one looks like a really nice 3-wave correction. It looks like, doesn't it? From the low in November, 5 waves up, 3 waves back. Everything that you kind of want to see to be going higher. Here we are bouncing from a 61.8, and so this 50% level in the middle is kind of key. So 7.725, if we can close above that, I think that we will at least go to the 38.2, which is 8.7. But because of this 5-wave pattern, 3 waves back, I'd like to see this exceeded. We break out and go higher from here. If we can't get above this 7.725 level, unfortunately, we could argue that this is just a 3-wave correction and we're still building a bigger base, not ready to go yet. These daily moving averages, the kind of wrong way around, argue that it may take us a little bit longer to build this, but a daily close, let's put regular candles on, A daily close above 7.725 for me would be that bullish reversal. So far for the last 3 days, basically since Friday, very narrow range, very tight little dojis here. So that's what we kind of really need on a daily close to be breaking out and on our way higher. And then 8.7 next on the outside in DOT. You could argue on a 4 hour, I suppose, that this is potentially... No, let's see. I'd really like to see that daily close hold. And then I would be feeling a bit better about buying this and buying dips in DOT for more upside in the next swing higher. Okay, let's take, I've got requests, let's take a look at Avalanche and see where we are. That one. I've been asked to look at it now. This is another one where against the US dollar, everything looks really very good, doesn't it? 3 waves back, and are we starting a new upswing, or is this just a bigger sideways correction? I have to say that I think that this is one that actually hasn't caught up as much as some of the others. But if we put I've got big fib levels, let's hide them. In terms of the weekly, this is really bullish, holding above the weekly moving averages, pulling back to them, finding support. But sometimes, you know, we can see that it takes a little bit of a time and a few tests to build the base that we kind of need to launch from. If I look at fib retrace levels from this high to this low, you can see we've reversed at the 786, pull back to the 38.2. This is kind of normally then you come back to the middle and you see, are we going to see another leg lower and a bigger ABC, or is this done here? I have to say we're right in the middle, aren't we? 5 flat moving averages on the daily, and it could be that we end up having to pull back and do a retest of the lows and a better bottom. And this is one of the ones where I think what happens in the broader market will let us know. If we go down to the daily, here we are again from this high to low. We're right at this 50% point from the high at beginning of December to the low mid-month. This looks like a 3-wave correction back to a 50% level. And so really this is the deciding price, 44.6. Above that in Avalanche dollar, we are next leg up, and we could argue that this correction's over and this was our 3 waves here. If not, I'm afraid I think that we see another leg lower. And you know, when you reverse at the 50% here, we could, simple rules, right? If we lose these lows, we are likely at least to reverse to 50% from this low to high, but more likely 786 or new lows. So that's where we are with AVAX. Now, if we look at AVAX against Bitcoin, and this is quite useful for a lot of alts, are we outperforming? If we take a look on the weekly at where we are AVAX against Bitcoin, it's not clear. Like, big picture, we had this lovely big rally in 2023, 3 waves back. We're building a base. Are we going to start the next leg higher? For me, this is key resistance, 52,271, and these moving averages are flat. I would say that it's not clear yet. One thing is clear, that as Bitcoin has gone sideways, like a lot of altcoins, this is outperforming against Bitcoin. So as Bitcoin goes sideways, Avalanche is performing very nicely. But when I look again from these, this looks like very nice 3-wave correction as well. But here we are stuck in the flat sideways moving averages. And again, when I measure from the 20th of December low here to high, we are a little bit beyond that equal measured move level, but here we are again at this daily 50. So we could just have a look, and if we close back underneath it, I would say we really need to close above this daily 50 and not pull back too far. Otherwise this would just unfortunately be a 3-wave correction, and we risk a bigger pullback to a retest of the lows. Let's look. Bigger picture on the weekly. It does look like it's trying to bottom. This is a lovely swing failure, double bottom here. And I like how we're holding above this weekly 20 moving average. I would not want to see this close back underneath it, but it's not quite clear that we are going up again yet. When we do go up, so when we break up above that daily 50, we're going to look for the weekly 50 and next swing higher. We have really nice targets because we can measure from the low in October here, 2023, project it from here. Our first target will be the 61.8 of this first swing, which is 85,000. Second target would be 117,000, and a slightly higher high above the December 2023 highs. So yeah, we should see a really nice move, but it's just not clear that we're pushing higher yet in Avalanche. Okay, I am going to look at a couple more. Algo and Sui are pretty interesting charts at the moment as well. So in fact, let's take a look at Sui. So here's Sui. This one is really trending through the holidays. Every time Bitcoin has had a really nice pullback, it's doing really well. One thing, if we say that the low in 2023 was a wave one, which I think it was, and a very nice 3-wave pullback here until August of 2024, when pretty much everything bottomed, then a very common relationship between this wave one and this wave three is either 1.618, which we tested and got above in November, and 2.618, which is where we are next, sideways at 5.22. If we get above 5.22, can hold and continue higher from here, I would say 7.3 would be my next upside target, and 8.16. But we are at one of those levels where we could see a bit of a bigger pullback to the previous wave 4, which could mean in this, or previous swing low, back to 4. What is also quite interesting here as we look at this price action is it started to become choppy and overlapping, whereas before when you trend you don't kind of pull back into the previous swing. And so potentially this says to me for this wave 3 that we are potentially ending this wave 5 within it, so we could see a little bit of a bigger pullback here. So if you're in this one, which I've been in, let's look at this most recent swing that we have done from the low at the end of the December, the last week. If we do that, for me, I'm going to say we need to keep holding above this 236 fib level from the 30th of December low if we're going to keep trending higher. And because of the risk of a bigger pullback, if we close back underneath 5.02, I am going to get out and wait for that bigger pullback back towards those daily moving averages to buy. And if we can hold and push above 5.22, those bigger upside targets, 7 next, apply. Do I think that this is the all-time high and Sui's never, absolutely not. I just think that this, we're at a kind of level where in an uptrend, we are at a little bit of a risk of a bigger pullback in this one, so watch out for that. Okay, I'm going to be back with a whole load of meme coins and a separate video on AI coins, and let me know what you see out there that's interesting or you'd like me to look at.